Dear Mind Academy YouTube channel viewers, welcome to Get to Give series with one more financial enthusiast, Mr. Kiran CK, who has joined with us from India. He is an astute mind when it comes to finance and especially the market related insights. He's a sharp brain, be it mutual funds or be it stocks or shares. And without wasting any further ado, let's kickstart our discussion. Welcome to Mind Academy channel, Mr. Kiran.
Thank you. Thank you so much. Thank you for your warm welcome.
The pleasure is always ours. As part of the Get to Give series for finance, today what is the theme we were outlining is, in general, the root of any issue is generally addressed with all seriousness, but the contributing factors are generally underplayed or overlooked for various aspects. So today, what we were thinking as part of this financial discussion forum, we would be focusing on the contributing factors for a mutual fund, especially with respect to the NAV. Now, for the benefit of the viewers, Kiran, can you take our viewers through what is NAV? We will start it from there.
Yeah, sure. So NAV basically means net asset value. So what basically happens is, especially NAV is determined for mutual funds, not for stocks. So stocks is determined through price itself directly, the stock price, whereas for mutual funds, it's the net asset value. That's basically because mutual fund does not end up investing at one stock. So there will be a lot of underlying assets under which the mutual funds would be traded upon. So the money which you invest basically gets diversified into multiple companies which the fund house manages. So that's when an average of net asset value is being taken. So for calculating the stock, basically it's a stock price in general for a mutual fund.
So as a fund manager, if I have to understand as a layman, is investing in 50 shares.
Yes.
So then this net asset value, is it the average of all those stocks in which I have invested? As a layman, is that how I should understand it?
Yes, you can take it in a layman term, yes, but in terms of how your money gets utilized is totally on the fund house, because there is no guarantee that you investing, say, let's take an example of 5,000. So it does not mean that all the stocks which the fund house actually invests in, every 5,000 actually goes in an equal amount. They might end up giving you certain, your money might go into certain stocks which are underlying for that fund house. But in reality, the total earnings for that fund house, the money which goes into that fund and the return which comes out of all the companies is what is diversified among all the investors.
Wonderful, Kiran. Thank you for taking us through that very important information as far as net asset value is concerned. Now, as we said in the beginning, let us get into the aspect of factors which can contribute to either appreciation or depreciation on the NAV value.
Yep.
Now, what do you feel as one significant factor as far as an impact for NAV concerned? What is the first element which comes to your mind when I say what could be a contributing factor?
I would say the underlying assets. So if the fund is investing heavily into financial stocks, so financial institutions, so every fund would have its own motive as to why or what sector they are focusing on and for what purpose they are focusing on. So if that particular sector is not performing well in the market, so all the companies who they would be investing in, if their profits are down or they are not performing well, in general, will automatically reduce your NAV. And the vice versa happens even when there is a positive impact on the underlying assets.
Understood, Kiran. That's really a very simplified version of explanation. Thanks for taking us through that, Kiran. Now, if there is a change in the fund manager,
yeah,
in general, is there any impact which happens on the NAV? And if so, how?
Yes, it can have a positive as well as a negative impact. Because usually when if usually, as I say, in mutual fund, if somebody is investing, that is also one of the factor which we will have to look in, who is the fund manager and how much amount of experience the person has, and in what I mean, in previous, how has he been performing in terms of, because a fund manager might have an experience in financial sector or a metal industry, I would say, in his previous experience. Suddenly he is pivoting into something known as, which is completely out of say, into hospitality stocks or hospitality range, in those kind of fund houses. So of course there would be said that gray area where you might think he might not be having enough knowledge based on his past experience. But there have been certain cases in past also where people, I mean, fund managers who have outperformed the ones which have veterans in that particular sectors as well.
Wonderful, Kiran. Thank you. So there is an impact. So if there is an
Yes.
impact, who makes this call? Is it the asset company, or how does this transition happens, and what are the general factors which generally tend for such kind of changeover on the fund managers, Kiran?
Yes. So as I said, mutual funds, basically the price also gets impacted by majorly by the underlying assets. But the fund manager is someone who is not linked to the underlying companies at all. He's the one who is
True.
just managing the fund house itself. So in that case, usually the moment if there is a negative impact on it, people will start pulling out their money. So the fund will lose its money, and automatically when the fund reduces, the fund house will not be able to invest as much as their strategy which they would have put there. So automatically their NAV will start coming down. So that's the simplified version, I would say. The moment a fund starts getting more fund, it can have an impact on NAV. Whereas if suddenly due to change in organizational structure of the fund house or the fund manager, automatically if it has a negative impact, automatically the NAV starts falling down. So that also impacts the NAV.
Understood. Something which is very subtle, but it makes a lot of
Yes.
impact as far as the fund and its own course of actions are concerned. Now, during the course of your explanation, you were talking about the sentiment, what I understood. We generally come across this term called market sentiment. And what is this market sentiment, and how it plays a role in NAV and NAV's calculation, Kiran?
Yes. So a market sentiment is something which is basically, I would take it as an emotional way of how emotional way of taking decisions through emotions. Basically, in financial, if I put it in financial stock market or mutual fund or anything in that sense. So if I say if I'm emotionally driven, automatically if the fund house loses a very good fund manager, right?
Okay.
So I, without even assessing the next person who is coming in, just because I was very much attached to that person and how he was doing his particular one, so I might end up taking out all my money. But in reality, it can happen that the next fund manager who is moving in might end up doing much better than the person who was doing before. So that is something which is known as an emotional way of thinking and emotional decisions, which basically your decisions are driven by your emotions. So automatically, when your sentiments drive your decisions, I would say you will always end up losing money.
Very true. As Robert Kiyosaki very vividly quotes in almost all of his books, you should be at the corner of the coin, or the edge of the coin, where you see both sides of the coin and make a rational decision. This is what he
Decision.
strongly recommends, and I think that's what you are emphasizing upon.
Yes.
Now, the impact of fund manager and the sentiments and the emotions around the fund manager is one aspect of it. Now, generally, what I have observed is whenever there is a regime change, be it at a state level or be it at a central level, what happens is there is a significant impact which takes in the market, and subsequently it reflects on the NAV as well. So, how is that related? Is it again an emotionally driven decisions, or how is that go?
Yeah, I can say that it can be due to emotional driven decisions as well. At the same time, it can be the belief that I mean the investors have. So as you said, there is a regime change. So the moment the regime is changed, the next regime might not be so much. They might. It basically depends upon their ideology. which the regime runs upon. So say if the new regime is not so capitalistic in in their past, or their
They are
approach is
not
not
market
so much.
friendly.
Yes, so automatically that you tend to get polarized with that, and then you end up taking I would say an emotionally driven decision. So that's
So
how
again,
it.
it boils down to the same point. So then, if you are not emotionally stable, and if you take decisions based upon emotions rather than rationality, so then again, it hits everybody. Is it
Yes.
how it is?
Yes, that is exactly how it works. Especially in mutual fund house, yes, because there is a lot of underlying assets, and of course there's a proportion in which each fund puts up their money into. But say the major proportion goes into a couple of 5 to top 10 companies, and those all companies would also have their own way of thinking into how the regime works. So if they have a negative impact through their earnings, automatically it just affects the mutual fund house as well.
Very interesting. So it is basically, at the end of the day, decision making happens out to be a very important aspect for every individual, especially who's in market.
Yeah.
Great. So now moving on to another important aspect. If you see, mutual fund is a diversified concept. As a fund manager, you will be going into, as you rightly said, metals, construction, finance, oil and gas, power, so on and so forth. As you were saying, if there is one sector hit, how is that implies or weighs down on an NAV?
It again depends upon the nature or the strategy of the business fund house, because not all the funds will be investing in any one particular sector. There are fund houses which will be diversifying their funds. However, we usually see that, just as an example, you see blue chip, large cap, mid cap, or sometimes even very specific need like technology. All these kind of fund houses are there where they focus on certain strategy and the motive for which the fund house is running for. So if that the underlying asset gets impacted due to any of the external circumstances, say the regime changes or the internal circumstances as well, so automatically in those kind of situations, the NAV takes a hit or a positive. It can be both in any of the circumstances.
I guess you addressed it right there, because we have spoken too much on the negative impacts on the NAV, I
Exactly.
guess. So
Yeah.
probably you're right. Probably it may have an upward turn or a positive turn as well. Very true. And before we go into the closing remarks, Kiran, so in general, as NAV is concerned, I have listened to people over their conversations and analysis part. There is an theory which floats around, which I feel it's not rationally correct, but I thought I would listen to you. A lower NAV, many people consider it as a good buy, whereas an higher NAV, people consider it as not a good buy. But I find it really a strange assessment as well, because NAV proposition does not have anything to do with whether it is a good buy or a bad buy. So, what is your take on that, Kiran?
Yes, you're basically absolutely right in the notion and the thinking which you had. Basically, it's not if I would say just because the NAV is less, it's not a good stock, a good mutual fund, or you can buy more units through that. It does not work like that for mutual funds. Of course, you might say the same way works for stock exchange. Just because the stock is say just around 20-30 rupees does not mean that it's underperforming. It can be just undervalued and nobody has ever looked into it. That is something which is also known as untapped. Whereas in mutual fund house, it does not work like that, because mutual fund house totally depends upon either the way of your investing. So here, say, let's take an example of SIP. So if you're systematically investing money over month on month basis, the major factor which plays into is the compounding. It's not the NAV value, just because in the initial phases you might not be having enough units, because if the NAV moves up, you might not see so much jump in your profit or downturn in your profits as well. Whereas the moment your NAV keeps on growing over a period of time, your unit keeps on adding up, the jump in NAV is proportional to your returns. So automatically the same amount of returns you end up getting. So it's not that just because the NAV is less, we end up getting more units, so you can earn more profits. It does not work that way. Say if your strategy is to invest in lump sum, yes, for a short period of time, yes, you might see a difference in those kind of strategies because you're not going in a proportional compounding. You're just investing one time. You might end up getting more units in the lower price of an NAV. Later on, you might not get if the NAV increases. So that's also plays a very important role.
Great that you have given shot in the arm for me as far as my confidence is concerned, Kiran. Thank you for that. Now, as you were explaining it around, one point which struck my mind is there anything else which plays around NAV? Because as Einstein once said, compounding is one of the most fascinating elements which has been ever identified by human beings. So this aspect of NAV and the compounding, is there anything which you feel as a contributing impact? Of course, the underlying assets, their own streams, their own situation, the specific sector impacts, all those things are well known. But is there any other contributing factors, like emotions like this? Is there anything else which can impact an NAV?
I would say there are some more factors. They might not have so much impact, but they would contribute, especially the way the fund house runs, the expense ratio or the fund expenses which runs for the fund, which might be they might be investing into do some research, right? So that is what they sometimes end up pushing on certain expense ratios or entry and they call it as entry or exit loads. So you might end up paying those charges. So if the fund house is increasing those as well, so those will have certain effect on NAVs as well. So that is also one of the thing.
Very interesting, Kiran. So at the end of the day, it all boils down to one or two individuals, the fund managers.
Yes.
People whom we trust all our hard-earned money upon. And it's how they make their decision. And I guess it's an hot seat for sure, but that's where
Yeah,
it boils down to.
exactly. They're the one who are controlling our funds.
Wonderful, Kiran. It was really an fun-filled segment in finance. I guess if things are bifurcated and dissected in this way, market is not as complicated as many have as perception is concerned. Thanks for sharing your time and insights.
Thank you for providing me an opportunity as well. Yeah, sure.
It's our
Happy
pleasure,
to.
Kiran.
Yeah.
Looking forward to listen more and learn from you, Mr. Kiran.
Thank you so much. Thank you for providing the opportunity. As I said, again, we would love to do some more sessions like this in future as well. Yeah.
For sure, we will be engaging on regular pedestal. Thank you.
Yeah.
So,
Thank you.
dear Mind Academy YouTube viewers, that was financial enthusiast Mr. Kiran taking us through our insights for the evening with respect to NAV. It was a great evening. For sure, we will fall back soon to learn more about finance and beyond. Till then, stay tuned, stay safe. See you. Bye bye.